All right, so in this video here, I'm going to explain to you guys how reading market momentum will help you to do two things to help you in your personal trading. So whether you're an aspiring trader, you're somebody who's struggling, you're taking trades that, again, you shouldn't be taking, you're getting stopped out on, or if you're sizing positions too heavily, assuming there's going to be large momentum on the day, this particular video will give you context and perspective to hopefully not make those mistakes. Okay. So the two things it'll do is number one is avoiding trades you should not be taking. So one thing I've seen in 2 decades is um, I would call it surface level analysis, where traders will take trades that are not high quality trades. And this really can be solved from reading the market momentum. Okay. The second thing is that they size a position way too big because they don't read the overall market momentum as well. Okay. Obviously, there's certain days in the markets where you have 1% moves. So, for example, on the SPY today, this thing really isn't moving. We're going to talk about this as a case study on the video today. Um, it's not moving. Okay. So, if you're not expecting a move like this, then in my worldview of trading and risk, again, risk management has a lot of different aspects to it. I don't want to size a position aggressively. Okay. So this is going to matter to us, and it helps us to really do these two things. If you can find other uses out of it, all the better. Okay. So let's start with the first rule to understanding momentum. You can see how this is slowly starting to break here as we're making this video. Okay. Without significant momentum from the indices, then many, not all of them. Okay. So there's some names that are independent that do their own thing. Most of the other broad market names will chop. Okay. This is a universal thought process each day, each year. Um, again, I've been doing this for 2 decades. This rule here, literally, I've been using since 2009. Okay. So it doesn't matter, anywhere in the world you are, if you can read the broad market indices and understand, is it going to be an impulsive trend leg? Is it going to be a sideways action? Is it going to be a little bit of risk off? Literally just answering this alone solves so many problems for a lot of traders in the market. Okay. So let's actually go through this. This is great that it's selling off because I can really explain this to you here and now. Okay. So before I go to rule number two, let's start with the analysis for this particular trading day. The first thing we do is we want to look at the SPY and QQQ. Okay. Now, obviously, if you're watching this video, everybody analyzes the markets differently, right? You could ask 50 different people in the world what their views on the SPY and QQQ are, and you'd probably get 50 different answers. Okay. So this is where it does get subjective. I'm sharing this with you guys in the video, um, how we analyze the markets, and that we're just going to start here with the SPY. Okay. So first and foremost is this is context is a big deal. Okay. Context matters. And this is where, in my personal view, a lot of traders that read books are tied to systems and rules, and they're too afraid to venture outside of those rules or to think freely, um, basically handcuff themselves because they're afraid of breaking a rule that, again, they shouldn't be afraid of breaking. Okay. So let's talk about the SPY here and give you a contextual view of what's going on. Okay. So really in the past, how many days, this is from Friday. Okay, this was 4 trading days, did nothing. So really in 3 trading days, this has moved a total of 10 points. Okay, this is a relatively large move for the S&P. Okay, so contextually, the way that we view this, and if you've heard this term in books where they talk about market breadth or advanced decline or the energy of the market, let me give you a very simple perspective because I don't use indicators to read any of this. It's, again, I've been doing it for 2 decades, so it's a little easier for me. But when you look at this perspective, imagine climbing up a flight of stairs. Okay, you're running up a flight of stairs, and you go to a sports game, and you're parking in the parking facility. You have to go up the stairs, and you get tired. You take a break, you get some rest, and then you get back and you get on the stairs. Okay, that's how markets typically work. Okay, you get all this energy in the market that's exhausted, and it's going to do one of two things. You're going to trade sideways, which we did here for the first 1 hour of the market today. We traded sideways, or you're going to get number two. We'll call it SP selling pressure. Okay. So by just reading this today, we could decipher two things. Number one, you weren't going to get what kind of no momentum to the upside. Okay. So by just reading this contextually, what does that help you do? Number one, you avoid taking trades you shouldn't be taking. Okay. And I'm going to give you a real example of this here in a second. So I want it to be long Amazon. by reading the market context today, it says, hey, you know what? The Amazon trade, you're going to have to put the brakes on that. It's no good. Even though I've done independent analysis on this stock. Okay, because you're reading the market momentum at large. Okay, number two is it tells you if I'm looking at short ideas, I'm probably going to get some slight selling pressure. Okay, so this gives you context to the market at large. Okay, so let's go to the smaller time frame here and look at this intraday. So for the most of the morning, this really did nothing. It's not going to get momentum higher. It finally broke this key level and it's starting to break down. Okay, and I'll explain to you what these levels are in a second. It's too hard to commingle a YouTube lesson on the channel and then talk about other things. So I want to just focus on what we're discussing in this video, is reading the overall market sentiment, okay, and reading the momentum, okay. So that's the first thing. Without market momentum, uh, if you can't read that, you're going to end up taking trades you shouldn't. Okay, now I'm going to show you an example of this right now. I'm going to go over to the momentum monitor. Again, if you're not familiar, we publish this every Sunday. You can get it at the longvolreport.com or the longvol.com. And one of the ideas this week that I was watching was Amazon. Amazon, potentially go to all-time highs. I like to look at it as a swing trade. It needs to hold 185. Um, but I want to watch this week for potential swing trade. Okay, so if I'm watching this week and I come into the market and I'm paying attention to, and I'm like, hey, let's look at Amazon here. And I was like, I want to swing trade this. Well, obviously, when the market opened this morning, if my view is to swing trade it, because I read contextually what the SPY, and again, we haven't even got to the QQQs yet, because contextually I was reading this, right? It would negate my view of taking a long. I'd say, okay, maybe I'll wait till tomorrow, or maybe I'll short this instead. Maybe it changes my short-term view in the market. Okay. But contextually reading this stuff allows me to put these positions on. Okay, and that's really, really important because again, if you can read market sentiment and the momentum, it tells you what side of the trade to be on. And we're going to talk about point number two, how it can help you to size a position. Okay, because there's some days where you guys have seen it where the market does nothing, and I've seen it from a lot of aspiring traders where they oversize a position because they assume there's going to be a big move, and it ends up being a dud. Okay, so let's talk about that next. Okay, so the second point I want to go through is reading market momentum. How will it help you to, or how's it help me rather, to size a position, or from assuming that the order flow is going to be there, or magically shows up. Okay, so if there's one thing I've seen, to be candid with you guys in the video, that plagues a lot of traders, it's the topic of risk management. And the topic of risk management is so many layers deep. There's so many different discussions on it, but one of the biggest ones is sizing a position, especially for short-term trading. Okay, so the way I look at the markets for nearly 2 decades is if I'm going to size a position intraday, it needs to meet one or two parameters. Number one, there needs to be we're going to call EN, enough room on the trade, meaning that again, the juice has to be worth the squeeze. If it's not like, again, going to be a move like this, or if I don't think it's going to go from here to here, I'm probably just going to size a position at half risk. If I think it's going to be a move where it goes from here to here, I'm probably going to swing for the fence. Okay. So that's the second thing I'm always paying attention to when I'm looking at markets, is the assumption for the overall day. Okay. So obviously, you can see the S&P and the Qs today, finally, again, they're really, really starting to sell off here. I mean, pretty dramatically. And again, this helps you contextually because if you were to come in today and look long, it's an issue. Okay. So the analysis for today was there's no clear signal for direction, but the bias is leaning bearish given the context. Again, the past few days of the move. Okay. So the rule number two is context, and we'll talk about sizing, is context to the market matters. Okay. Where this rule here is pretty much universal every day. You can come in, look at the SPY, the QQQ, Dow Jones, and get a contextual read. Okay. And try to determine step number one is where is it going to chop? Okay. Is it going to have a little bit of risk off like you got here? Is it going to break and rally? If you can answer that, it solves so many questions. And again, this doesn't take a lot. It just takes a little bit of practice. I don't use indicators. I mean, literally, there's no indicators on here. It's not. We'll talk about this later, but um, there's none of that to give me, an insight. Okay. The second contextual things where it changes situation by situation is you have to take into account what the market's doing at large. Okay. And this is where I think a lot of systematic or rules-based traders that struggle from trading uh, tend to have issues is because they're afraid to step out of their rules, okay, and to think contextually or to subjectively look at the market, okay. It's earnings season right now, okay. Netflix reports, Taiwan Semiconductor reports, a lot of large cap companies report. If we look at Netflix, for example, um, and I go over to this here, Netflix has earnings here in a few days. Okay, they have a $53 implied move on Netflix. This is a large cap company. Okay, if this earnings beats, it likely helps the market. If it doesn't, it drops the market. Okay, so during earnings season, typically my assumption is most of the time, okay, the price action is generally slow because the market's waiting to see you know, what is going to be reported from these companies. Okay. So my expectations tend to be lowered a bit from a price action perspective. Okay. The final point is this is it's also options expiration. Okay. On Friday, you have options expiration. If you're not familiar with why this matters, I'll give you a quick tutorial. You can do your own research on it. There's a lot of games that are played. Okay. The dealers and market makers will move, certain stocks and hold them sideways sometimes to basically burn out the premium on the options. Some stocks will pin, something called pinning in this in the business. A lot of games are played. Okay. Now, again, I realize I can't go step by step and explain it to you guys. These videos are intended to give you guys perspective shift, and if you have questions, you can ask. Um, but this is the rule number two: is context to the market. Okay, now you can get away with just using rule number one. Okay, if you can just every single day, if you're a new trader or aspiring trader to do this, if you can just literally come in every single day, and I'm telling you, it helped me a lot in my career, and simply just look at the market from, okay, what is going to happen with momentum? If you can just figure this out, I'm telling you, the edge you provide yourself is massive. It's bigger than any edge an indicator can give you, reading Barron's, doing a pre-market checklist. If you can just do this, it's a solution to so many issues for so many traders. Okay. You don't need this. Obviously, this takes a little bit of time because it's more nuanced. There's a lot of things that go into it. But eventually you can add this filter into your analysis to help you to do analysis of reading market momentum. Okay. So let's go over here back to the charts and talk about a few things here. Now, obviously, you're finally getting a lot of selling on this here. Literally, as I create this video, you're just getting a lot of pullback on the market. Okay, so this is again helpful when you look at this because when I came in this morning, just like I showed you on the spies, my views were pretty straightforward on this. That you probably needed to reset a bit to this effect. I didn't think so. I'm sure there's some news out of the Middle East that has come out to drop it this quickly, but um, that's what I would look at there pre-market. Okay, so that's going to be it for this video. If you guys have questions, comments, you guys can throw them below. But hopefully this helps you to read market momentum because if you're on the right side of the trade by just simply reading market momentum, it'll help you to again take the right trades, to size the positions correctly because you're assuming that again some days are chop, some days again this came out of nowhere. Okay, but at least coming into today, if you watched the video yesterday, I thought we were a little bearish. Um, Gives you context of hey, look, I want to be short some things. Okay, thanks for watching. If you guys have questions, comments, you guys can throw them below. Make sure to like and subscribe. Remember, you can go over to longvolreport.com. You can get access to this weekly report. We publish it each and every week. You can get a full access to it. Just click the Start Here tab. It'll explain to you how this report works. Literally, you can come here, learn how it works. You can watch these videos on YouTube. If you want to become a member of the report, you just go to the memberships tab here. You can read about it. Click this here. You can sign up for this. It gives you access to it. Basically, 30-day risk-free guarantee. So if you sign up to this and get access to the report, you can use it, see if it works for you. Um, Literally just click this tab here. And if you don't like it for whatever reason, we'll give you your money back in 30 days. Okay, so that's a short video and this is a report there. Again, questions, comments down below, and I'll see you guys in the next video.